Hello, this is Gary Kuhn. I'm the Managing Director of Finer Wealth Management, and I'm here with my colleague, Mike Finer, CEO and founder of Finer Wealth Management. And as we're taping here in the fall of, was September 12th of 2017, we thought we'd talk a little bit about what's happening in the markets and also that the overlay of geopolitical as well as natural disasters and other activities that have been taking place at this time. You might think of the tale of two cities. These are the best of times, these are the worst of times. In the best of times, we actually have been having a strong stock market. We're at record levels in the stock market. Corporate earnings are coming in well. And in general, we've had a fairly strong and growing economy here in the United States. Yet we're also all concerned about what's happening in North Korea, and we've seen hurricanes, weather events happening, and we have some thoughts on that and how that might ripple through and affect the economy, affect consumers from an investment standpoint. So I'll turn it over to Mike to kind of give some initial thoughts on those issues.
Thanks, Gary. And it does seem like we're a broken record in many ways because the markets have been reaching successive highs in 2017. Some people call it the Trump rally, but really what it is a global economic expansion. We see global expansion not only in the United States, but in most developed markets and even most emerging markets at this point. So aggregate gross domestic product is increasing greatly. And as Gary mentioned, we have geopolitical turmoil that seems to, affect short-term decisions. But ultimately, the stock market is a function of corporate profits. Some of these geopolitical events do cause white noise in the market, but when you really think about it, if there's a problem in North Korea, you may want to invest in the defense stocks of United States companies. If there's a problem with hurricane damage, you may want to take a look at the materials companies or the home builders or even the suppliers of all the materials that go into rebuilding. So there are a lot of opportunities in the stock market as we have a lot of these geopolitical events. In addition, we are sort of in a natural cycle right now in the first year of an inaugural president. Typically, some of the growth stocks work very well in the second half of the year to include technology and healthcare.
And you may recall, if you watched one of our prior videos, we were predicting, or we had a target of Dow 22,000, which we have crossed. And we also were looking at S&P 2,500, which I think we ended today at maybe like 4 or 5 points shy of that. So we've actually hit some of the targets that we felt we would hit this year. We're hoping for further growth throughout the remainder of this year from an investment standpoint, but that doesn't mean that there won't be daily or weekly volatility in the market as you do see these geopolitical events come into the fore. Individual companies, some are doing extremely well, hitting new highs, others not so much. So it's important to look at the individual companies and their situations when making investment decisions. Mike?
Yeah, I can't overemphasize the fact that like Gary said, the S&P 500 is a few points away from 2,500. We've actually adjusted our targets where we believe the Dow Jones Industrial Average could hit 23,000 this year, and the S&P 500 could be closer to 2,575. Within that, though, there are stocks that are still at 52-week lows in sectors that are at lows. For example, oil companies are still underperforming, while technology companies are doing really well. So you still have to take a look at which areas of the markets may be value plays and which ones may be either overvalued or richly valued. So we still believe that there is run left in the market for this year, and that's something that we're focusing on a little bit after September, which typically is the worst month of the year for the stock market, but it isn't playing out that way right now.
With all of that, it's important to have a strategy for your portfolio and your investments that is tailored to your particular needs, cash flow needs, retirement planning needs, etc. So as we have these shorter term circumstances in the market, it's also important to consider your own individual situation, which may be very different from your neighbors. So it's important to go through that from both a tax planning standpoint, a financial planning standpoint, an investment planning standpoint, a retirement planning standpoint, and even an estate planning standpoint, to make sure that all of those plans are integrated and in sync.
Most definitely. And feel free to reach out to us anytime. We love to hear from everyone at www.finer.com. Please take a look at other videos that we have at www.finertv.com, or call us, email us anytime at 978-740-1011. We'd love to hear from you or talk to you if you have any questions.
And thank you for watching.